What's up, Facebook? Ty Crandall here with Credit Suite. Today, we're talking about where the business credit reporting agencies get your data, get your information. And it's an extremely important topic to dive into because, look, when you are applying for loans, when you're applying for credit cards, when you're applying for credit lines, then what happens is lenders and credit issuers are making all kinds of lending decisions about you based on the information that's on your business credit reports. Here's the scary thing. If you don't know where all the information is coming from that's on your business credit reports, then you can't control your ability to get a loan or a credit line or a credit card. And that's my goal. It's important to know that there are organizations like credit bureaus that's entire purpose and mission is to gather information about us. They then take that information and put it into a format where they're giving it to lenders, they're giving it to credit issuers, and extremely important decisions are being made about us based on that data. Should we be lent money? Should we be issued a credit line? Should we be issued a credit card? What interest rate should we pay? What credit limit should we get? These are some of a multitude of factors that take place all based on the data that these guys are gathering about us. But here's what's scary. If we don't know where all this data is coming from, then we really can't control it, and we really can't give ourselves the best chance of getting the financing we need to grow our businesses. Edgar, thanks for coming in. Michael, what's up? Pamela, hello. So this is exactly what we're talking about today. Today we are diving in and we're talking about the very surprising truth of where the CRAs, the credit reporting agencies, actually find your data, find your information. Again, I can't tell you how important this is because this is not like consumer credit. You see, in the business world, these guys get data from places you've never even thought that they're getting data from. And in the consumer world, it doesn't happen like that. It's completely different. So I'm going to decode this today. I'm going to unveil this. I'm going to show you exactly where these guys are getting their data so you can control it to give your best chance, to give yourself the best chance of getting financing. Okay, at the best terms, by the way. Okay, so here we go. So all credit reporting agencies have the same mission. Do you know what the reporting agency's mission is? It's one thing: collect, sell data. It's what all bureaus do. Consumer and commercial, all the bureaus exist to do is to collect and sell our information. Okay, now for the business credit reporting agencies, what they're doing is they're collecting data to basically see if your business is going to pay its bills on time. Now they refer to this actually, their risk in most cases with scores is your ability to pay your risk of going 90 days late on an account. That's what they're looking for. They're looking for your ability to be able to pay the not go 90 days late on an actual account. So this is very, very important because that's the one and only real thing credit issuers and lenders care about. Look, they ask you for a lot of documentation, a lot of questions. You always have to boil it down to one thing. All they care about is your ability to pay them. What they're trying to determine is whether you will pay back what you borrow. And they're figuring that out based on this information that's coming from these reporting agencies. Now, some weigh public records more heavily, so they all weigh things a little bit more heavily than others, okay? Others weigh payment history more effective. So again, there's a lot of data that goes in, and some of it's weighted a little bit more than others. So let's look at public records. So on business credit reports, we're looking at bankruptcies, we're looking at liens, we're looking at judgments, okay? Now, generally, this comes from court documents, okay? So PACER, for example, has information on all U.S. federal court cases that can be accessed. Now, there's also public record information from brbpub.com. You should look into this, brbpub.com. Includes filing dates, includes bankruptcies, includes closing dates. All this information becomes very So let me give you an example of a real occurrence that's going on right now in my life. We are working on securing an SBA loan. What happened was the lender came back and said, we have to have you pay off this judgment for $72,000. And I said, what judgment for $72,000? I don't even have a judgment for $72,000. I tracked it back. It was on my LexisNexis credit report. LexisNexis got the data from the county. The data from the county was bad. So yesterday I spent my day up at the courthouse getting all the documentation I need to prove that this information is not accurate. Guys, look, my ability to get an SBA loan is coming from public record data that's inaccurate. This is why I'm teaching this. I don't want you to have exactly the same problem. So this is an example of public record data. Who collects public record data? Well, LexisNexis is one of the biggest sources in the business world. LexisNexis collects the data. The bureaus get the information from LexisNexis. This is oftentimes how these kind of public records will end up on your credit report. Heather, thanks for coming in. Carl, Frederick, welcome. Thanks for coming in. IRS information.
So tax lien filing information in different counties that you may actually have as well, okay? Also, what other information? What entity are you they'll get from Secretary of State? Information on your company makeup. All of this comes from IRS data. Now, a lot of data that comes from the business credit reporting agencies comes right here. It's voluntary reporting by creditors. Okay, so CRAs strongly suggest to companies that they report their credit to them. Okay, then the borrower determines based on how the borrower pays, right? If they're paying faster, they're getting better scores. They're getting rewarded with getting good credit, right? So again, what happens is the creditors that supply the data even are allowed to come in and get alerts. So they're able to get alerts when things change. So what happens is the reporting agencies incentivize them. They say, look, if you give us information about the people that you pay that make payments to you, we will give you information about those people as well that will help make it easier for you to make lending decisions. As a matter of fact, if anything even changes in their credit circumstances, we will then file an alert to you so you can take action. Why does this matter? Please hear this from personal experience. Owned a mortgage company collapsed. Personally guaranteed debt in the business name. Started to go late on the revolving credit for the business, okay? What happened then was that triggered alerts to all my credit issuers, personal and business. Next, what happened was all my credit issuers lowered my limits to what I owed. 30% of your FICO score is what you owe, utilization. So the minute my limits became what I owed, my scores tanked, my ability to recover from the session was completely ruined. That's why you need to know about alerts, okay? Alerts are where credit issuers are being notified of changes on your credit profile and they're removing your credit even when you didn't go late with them at all. I didn't even go late with those other credit issuers, but they all lowered my limits to what I owed because they got alerts notifying them that I was late on other accounts. This is why you need to care about alerts. And it's one of the incentives that they give credit issuers to report the data to them. Now, here's another question. Why don't more people report to the business credit reporting agencies? Because it's not as easy as you think. For example, Dun & Bradstreet requires 2,000 accounts in some cases monthly to be reported to them for you to even be report. So if you're a small business owner and you help 100 people a month, 100 new customers, you don't even have enough data to give to D&B where D&B will let you pay them or let you give them the data. So this is why, even though they incentivize credit issuers to give them the data, most data we have, real credit we have with vendors, never gets reported to them. 97% of it doesn't. And people want to know, why don't the reporting agencies have this data? Why don't people report to them? Because the reporting agencies won't let them. They make it very difficult for people to report the data. They only want high volume data providers. And since most of us in the business world are small business owners, we don't fit that bill. Hey, Ken, what's up? And Sashas, I might have pronounced that wrong. Hello, Mark, Los Angeles, California, checking in. Thanks, buddy. Appreciate you coming in. Thanks for the likes, thanks for the loves, and thank you guys for the shares. It helps us help more people. So, okay, self-reporting by borrowers. So credit applications have industry information as well. Industry classification codes, SIC codes, time in business, number of employees. So what happens is you are self-reporting this information when you're filling it out on applications, okay? Whether you have a DBA, your headquarters, all these things. I cannot say this enough. What's happening is a lot of the data the reporting agencies get about you, you give to them. Here's how it works. What happens is there is a secret third-party database called the Small Business Finance Exchange, SBFE. SBFE is owned by banks, lenders, and it is a give-to-get model, which means if you give SBFE all of your customers' information, all of their payment history, all their loan data, all their loan performance information, SBFE gives you that data from all other lenders. So what's happening is these lenders have a behind-the-scene boys club where they exchange information about us that we don't know is going on. Every time we fill something out on an application that goes into SBFE, all other lenders have it. Then when we go and we fill out one thing different on one application and then it's something different on the other, then it creates a discrepancy and it oftentimes results in our loans getting denied. So what SBFE does is they're taking this data from your applications that you're filling out, they're putting it into a third-party database, and then the bureaus are there's four vendors that actually can pull this data from SBFE and populate it onto front-facing reports. Those vendors include LexisNexis and Dun & Bradstreet as well. They're bureaus. So again,
very important. Let me teach you how it works, okay? You go fill in an application, okay? The application data you have goes to SBFE. All lenders are members of SBFE, almost all of them. So whenever they go in and you apply with another lender, they pull the application data that you filled out with another bank from SBFE and they make all kinds of lending and credit issuing decisions about you. And that data also gets pulled out and oftentimes populated on business credit reports. So that's how this data comes. It comes from you. You're self-reporting it. You have to scrutinize the information you're putting on applications because you could be providing the wrong information. Wrong information right here, industry classification. So people make this a mistake. Figure out what your own SIC code is. Don't let the bureaus determine this for you. Don't let anybody determine it for you. You do the research. You find your own NAICS code. You find your own SIC code, the ones that fit your business, the ones that reflect that you're not high risk, and use it everywhere. Use it on your taxes. Use it anywhere where it asks for an SIC code. You determine what it is. You self-report it. Don't let them report it and tell you what your SIC is. You do it for them, okay? And Heather says, what was the rest of the BRB website? It's BRBpub, PUB.com. Mark, Golden Nugget, good. I appreciate that. Okay. Let's go back. So let's look at this. Shared data. Payment data from lenders, suppliers, credit issuers, okay? Vendors that don't report can provide trade references. Trade reference is just something where they're adding kind of a notation on your credit report. So shared data. This is information that's reported to them. It's information by lenders. It's information by credit issuers. It's information from vendors. Those sources, that payment data, that information gets put on your credit report. UCC fines. Oh, got a story about this too that's preventing the SBA loan. Okay, business gets approval for financing. Okay, they pledge collateral or not to secure it. And then what happens is the lender files a UCC filing on the credit report showing they are then, you have a UCC filing. What's a UCC filing? I'll tell you. A UCC filing is the reporting that you have a loan to the credit reporting agencies. That's what it basically is. So a UCC filing, I go to get a loan. The lender wants to tell everybody else that I have a loan because they don't want other lenders to give me a loan when they just gave me one. They put a UCC filing on the credit report. Here's what you need to know. You don't get any credit for the payment history with the UCC filing. It doesn't help your credit. It's not like making the payments as agreed helps your credit. They just put it on there as a UCC filing showing that you have an outstanding loan. Now, what's supposed to happen when the loan is done, the UCC filing gets removed, but it doesn't always happen. So right now, we're getting an SBA loan. What's happened to us is we had a UCC filing for a loan a long time ago, many years. We paid off. We got the loan. We paid it off. But the bank went out of business. And so guess what? Now we've got problems. Now we've got a UCC filing on our credit report showing we have a loan. We don't have the loan. We paid the loan off. The proof we need to get from the lender doesn't exist because the lender's no longer in business. So we have to fill out documentation and go through a process to manually remove the UCC filing so we can even get the SBA loan. So these are things you need to know. There are also lenders that, as curious as this is, they think UCC filings are bad. We've been applied for a loan and been asked, what's this UCC filing? It's not bad. It's a loan we paid off. We paid it as agreed. Here's our payment history. So UCC filings aren't good. They don't help you. They just tell other people you have loans, but they actually can hurt you. In those circumstances I've just explained, those are circumstances where we have a more difficult time getting financing as a result of those UCC filings. Collection filings, date, collection, agency's name, status, the amount disputed, collected, okay, the time, the close date if applicable. So this all comes from collection. So collection companies also submit collection data to the business credit reporting agencies. Here's the good news. What I find is that usually the bureaus will warn you about that, as weird as it is. So I remember the first time I had a dispute with a company, I'm like, I'm not paying this. I don't think I owe it. And they said, we're going to report you to the business credit reporting agency. I'm like, go ahead, do it. And so then the business reporting agencies notified me that a collection was about to be put on my credit report. They even suggested I work it out with the creditor so it didn't happen. Never seen that in the consumer world. So collection companies will put data on your business credit reports. And guys, thank you for the likes. Thank you for the loves. Thank you for the shares. My mission in life is to help entrepreneurs get capital. And the more you do this, the more engagement Facebook sees we have, the more people they let or give the privilege of actually seeing that we're even live here. So I appreciate that. Mark says active two more leads. Edward, I haven't talked to you in a while. Ty, if you get pre-approval letter from Wells Fargo, what are the odds of getting approved with them? Well, there's a difference between a pre-approval and a pre-qualification letter. A pre-qualification letter just means that you meet basic criteria and you got to a decent chance of getting approved. Pre-approval means you meet the criteria they have, and as long as you can document everything and everything works out like it should, then you have a pretty good chance of getting approved. So the answer is that you have a much better chance with a pre-approval letter. You do a pre-qualification. The federal government, grants that you have, loans, contracts, debarment, okay? And again, this even has to do with your payment history on loans as well. All of that's on your business credit report. Here's a surprising one. The media, press releases, news stories, online or offline. As a matter of fact, in this also includes social media. Also includes Michael, welcome. Thanks for coming in. Also includes Yelp, Bing, Yahoo, Facebook. Yes. The business reporting agencies have crawlers that scour the web to get this kind of information about your business and populate it on your business credit report. It's why you need to monitor your business credit. You can go to creditsuite.com/monitoring and get it $24 to get with our nav integration to D&B and Experian. Keep an eye on it because all this data is being collected and put on your report, and oftentimes it's not correct from these sources it's coming from. So because they'll accept all this stuff wildly, even from press releases, you need to know what's on that report. Directories, like I just mentioned, yellowpages.com, okay, Facebook, all these type of places are also ones that can qualify. Business registrations, incorporation, the date you incorporated, the filing status, okay, this is basically coming from Secretary of State data. Let me explain why that's so important. Okay, so here's what happens. I show this often. I'm probably not even going to show it today. You can be issued failing credit with Equifax and Experian Commercial if they know you exist and have what they call one piece of firmographic information. Here's how it works. If they know your business name, the state that you're in, and one other piece of data, which usually includes your SIC code, they create a credit report and give you a failing credit profile and a failing credit score. So what happens is this information comes from the Secretary of State records. I'll show you one of these credit reports so you can see exactly what I'm talking about. So this information comes from the Secretary of State records. So what happens, and let me zoom this into 100% and I'll show you exactly what this looks like. So here's a real business credit report from Experian. We see 28 score, shown this many times before, $1,000 recommendation and credit. If I scroll to the very bottom, you can see here I can't scroll anymore. My magic 8-ball, this is how I run my business, completely based on that. You can see there's no credit here. Zero. Zeros, zeros, zeros. There's no credit. You can see here that they have a failing score. This indicates potential bankruptcy, as high a risk as you can get. Why? Lack of trades. But here's what they have. They have the business name, you can see, business address, and they also have this, the SIC code. When you have that, and that, they populate a credit report for you. That's how it works. So why you need to know that is because when you file your annual reports with the Secretary of State, you're giving them the data they need to then supply it to the reporting agencies. When that happens, you can expect a credit report to be created for you, and you can expect it to be a bad score and a bad profile. Great news, great news, great news. The great news is it only takes one account to turn this whole thing around. You just need one account paid as a greeter early. You can get that through vendors like Uline and Quill and Gimplers and Granger, Strategic Network Solutions. One account that reports the reporting agency will flip that around on you, but you've got to have positive accounts to offset that negative. Thanks for the likes, guys. Thanks for the loves. Thanks for the shares. Okay, so Mark said, just got unsecured wells. Great job. That helped me get started with Credit Suite. Man, that's awesome. And I'm glad you're working with this. Great info. Thanks, Mister. Thank you, Rico. I've tried to get my credit score and cannot receive it. I was told it's locked. My personal score. Can't help you there. You'd have to find out why it's locked. I need more information to figure that out. I have my business old address still showing. How do I remove it from the web? Well, then here's how you do that. I use a service called Yext. Y-E-X-T. Yext takes all your information across the web with like hundreds of sources. You change it with Yext, it changes it everywhere. But Yext is fairly expensive, and there's ones that are definitely cheaper than Yext. You either manually need to go to everywhere that information is listed and change it, or you need to use a service like Yext to actually go through everywhere and have it done for you. Ken, Ty, I'm paying a NAV and Experian business and credit safe monitoring out of pocket. Will it affect me if I purchase your monitoring? No, it won't. As a matter of fact, if you go to creditsuite.com/monitoring, we have a new product where you get Experian, Equifax, or you get Experian, D&B, and credit safe, and you can add utilities and cell phone accounts that you already have to your business credit reports. So that might be a good option. And here's why I tell you that, because your payments actually get reported to credit safe. So you build business credit and you get to monitor your business credit at the same time. Get found on GoDaddy. TJ Ward, great advice there. Thanks again for the likes and the loves, okay? So the next thing, okay, we've got Inc. filings here. We talked about that a little bit as well. Okay, web mining, and we talked about that as well, right? Google, company website, Facebook, Yelp, okay? So having a website allows these business directories to basically get the information that's correct. So it all really starts right here on your website. If you're coming in and making that your website has correct information, you have the best chance of Yelp, Bing, those type of places to actually get done. What we did was we changed our business address, and we knew it was going to be a nightmare because our address was everywhere. So then what we decided to do was use Yext to change the address across the board. It helped us, and then we disputed it with the bureaus and updated it as well. Dun & Bradstreet has a service called iUpdate, free to use to update all your information with Dun & Bradstreet. Experian and Equifax, they're going to want you to pay for their credit monitoring, but when you do, they have a way through their system to update any information as well. Our SIC code was wrong with Experian. We solicited them to change it. They said, sorry, this information is coming from somewhere else, not us. We supplied all the information. We supplied Secretary of State records, tax returns, other bureaus information, and we said, no, you're wrong. The other bureaus have it correct. The Secretary of State has it correct. Our tax returns and the IRS has it correct. You're the only ones that have it incorrect. Go ahead and correct it. And then they did correct it. So sometimes they want you to supply some documentation to prove it, which is what we did, and we were able to get that updated. So if you have information you need updated like you just described, that can help you there as well. Okay, Brian says, hey Ty, NAV is offering business credit building. What's the advantage of using Credit Suite? Well, NAV doesn't really do business credit building. We work closely with NAV. Just so you guys know, we're the only affiliate partner with NAV that actually has the licensing ability, I believe, unless they've added anybody new, to actually resell their product. Okay, so we're very, very, very close with NAV. NAV doesn't actually do anything with actively credit building. What they do is they have what they call a marketplace, and their marketplace actually helps you come in and access business credit cards, access financing, etc. They don't help you through the process. They just give you a marketplace you can go to choose business credit cards, financing, those type of things. Okay, my business, They Fear Truth Music, was established 2018, January. Congratulations, man, 1 year in business. I would like to know how to receive a startup loan without business credit. Well, all loans, guys, are based on one of 3 C's. Cash flow, credit, collateral. Okay, so if you have cash flow, you can use your cash flow as a way to get financing. Even if you have a little, go to creditsuite.com/fundbox. FUNDBOX. Great, easy to get credit line if you've got some revenue going through your business. If you have good personal credit or a guarantor that does, you can get money that way. You can also get money using collateral as leverage, such as a 401k, stocks, bonds, things like that. If you want to know all the money you can get now, go to creditsuite.com/get-funding. There's like 5-6 questions, real simple. You fill it out, we'll tell you all the money you can qualify for. It's always based on the 3 C's, cash flow, credit, collateral. Remember, business credit's a way to get money where the C's don't matter. You don't need cash flow, credit, or collateral to get business credit. Everybody can get it. But if you don't want to get business credit or you want another way, you need cash flow, credit, or collateral. I gave you an easy way to get a quick credit line, and I gave you a way to get unsecured business financing where you can get a bunch of credit lines using good credit there as well. Okay, thank you, Mark. I appreciate that. Thank you very much. How about leveraging a brokerage account? You absolutely can. This is called securities-based financing. If you're, well, not a brokerage account, but if you're using stocks, you can do this. Not the actual brokerage account, because you can move money in and out of that. But you can leverage stocks as collateral. You get up to 90% financing with rates of about 5%. And you can get a loan or a credit line with that as well. So now you have a really good idea of where all these guys are going to get your data. I gave you information about LexisNexis. I gave you information about the Small Business Finance Exchange and all kinds of inside information that most people don't know. Most people don't know that the business credit reporting agencies are getting information from Yelp, Facebook page. You now know that. Go to creditsuite.com/monitoring, and there you can either get monitoring with NAV or with our NAV integration to Experian and D&B for $24 a month, or you can even get our brand new product for $99 a month. You get that and credit safe, and you can also add accounts you already have to your business credit reports. This is a huge game changer. You can add utilities, water, electric, satellite TV, internet, all that to your Experian and credit safe credit reports. You can even add cell phones. It's one of the coolest, easiest new ways to build business credit. You can find that at creditsuite.com/monitoring. If you missed this, because a lot of people are coming in now, go to facebook.com/creditsuite and you will be able to access this video in its entirety. And while you're there, go ahead and type in the letters EIN into Messenger and you'll get a free guide that maps out the exact steps to build business credit. I will be back in the weeks to come. In the weeks to come, we're going to be talking about the remarkable truth about SBA loans. I'm going to map out everything you need to know about securing SBA loans. We've been doing a lot of SBA loans for clients, easier to get than you think that they may be. Okay, we're also going to talk about the incredibly easy ways to set up business credit reporting agencies with all 3 of the reporting agencies the right way. It's going to be taking place over the next 3 weeks. I will not be with you next week. I'll be at Traffic and Conversion in San Diego, and I hope you're going. If you're not, add this to your list for next year. Social Media Marketing World in March, Traffic and Conversion in February. 2 of the best marketing and social media conferences you could ever go to. I'm there every year, so I'd love to see you there. I'll be in San Diego next Wednesday at 4, so I'll miss you here. But the next week after that, we'll dive into one more topic, then one more the next, and then we'll be wiping the chalkboards and starting over. Remember, I'm here typically every Wednesday at 4 o'clock Eastern with one and one only mission. Help you get money for your business by pulling back the curtain, telling you all the stuff the lenders and credit issuers know that you don't know and that we don't know, and they're trying to hold back from us, so you have the best chance of getting approved for the most amount of financing to grow your business, okay? I think I will have 8 trades now. Great job, Mark, Pamela. The guide is truly helpful. I really appreciate that. That guide has been downloaded over 1 million times, guys. So that guide is the Bible when it comes to business credit building. And Mark says the dates for Traffic and Conversion, I think it's what you're asking. Traffic and Conversion, I'm not sure of the dates. I think it's Monday, Tuesday, Wednesday of next week. I have another conference right after that, and it's in San Diego. Traffic and Conversion. Look it up. One of the best conferences you'll ever go to. Did you say EIN? Yes. If you're at facebook.com/creditsuite, type in EIN into Messenger, and you'll get our free guide that maps out everything to do with business credit building. I really appreciate you tuning in. Don't forget to go to facebook.com/creditsuite to watch this video in its entirety, to type in EIN and grab our free guide. Thanks for the likes. Thanks for the loves. Thanks for the shares. It means a lot for me because it helps me help more people, and I really appreciate that. And don't forget, in the weeks to come, the incredibly easy way to set up business credit profiles. We're talking about everything to do about SBA loans, so you know exactly what to do to get an SBA loan. And I look forward to seeing you here in 2 weeks when I'm back. Frederick says, I have a DBA for 1 year, 7 months. Can Credit Suite help? Yes, we absolutely can help, even if you just started the business. Ken says, I'm confused. Should I get the advanced or do it yourself? If you're doing, it depends. If you want to add accounts you already have to your business credit reports, that's when you want to get the advanced monitoring at creditsuite.com/monitoring. If all you want to do is see your business credit reports, get the $24 option. You get Experian and D&B for only $24, but for $99, you can add accounts you already have to your business credit reports. Does that make sense? Do you have accounts to add? You have to have utility accounts or cell phone to add. Even if the utility accounts are in the personal name, because maybe you work from home, you can still add those as well. And thank you, Mark, for thanking me for the service. I appreciate that. I will see you all back here in 2 weeks on Facebook Live, Wednesday at 4 o'clock Eastern. Thanks, everybody. Have a great day.